What's up, guys? Today we're talking about yield farming and why correlation is overrated and what to do instead. If you're new here, my name is Richard and this is my current open positions. You can see I'm sitting at a nice profit on most of my pools. Still trying to turn around some of my pools like this one. For example, the base is for everyone token. It's recently making a little bit of a comeback. I'm still down on this, but most positions are sitting in nice profit so far. So my strategy has been working pretty well most of the time. So averaging about 40 to 50% APR on my capital right now. And you can see my exited pools now total to roughly 7.7 Ethereum. So let's dive right in. And just a quick disclaimer, this is not financial advice and this is for entertainment and informational purposes only. I cannot guarantee any profits, but what I can tell you is that you would most likely be better off following these strategies rather than just flying blindly into the market. So the plan is to talk about correlation, what it is, and why it's not as important as this other thing, and then give you some examples of that so that it kind of makes sense. So if we look at correlation here, correlation is basically how the token is moving relative to each other. If it's moving towards the same direction, then it's positively correlated. So any number above 0 would be green and positively correlated. You could go on sites like DeFi Llama to check the correlation, and you could change like the time frame to be 7 day, 1 month, or 1 year. But you can see I've pulled up 4 tokens here and they're all pretty correlated on the 1 month time frame, as they should be, because most cryptos and alts are correlated. They typically follow like the Bitcoin price action. When Bitcoin is pumping, stuff like Ethereum, Solana, and even smaller cap altcoins like Magic typically pumps, but sometimes they don't move together. For example, if we go to the 1 year chart here, you can see Bitcoin and Magic actually has a negative correlation. This means that when Bitcoin was moving up most of the time during the year, Magic was going down. Or if Magic is moving up, that's when Bitcoin was going down, right? And Ethereum and Bitcoin this year has actually been really low compared to Solana, but correlation changes all the time and it's not really reliable in my opinion, because I was looking at this chart basically 1 year ago and Bitcoin and Ethereum had like a higher correlation than 0.5 on the 1 year time frame when I was looking at it last year. And there are fundamentals that could basically throw this correlation out of whack. For example, Bybit got hacked by North Koreans a few months back, basically stole a lot of Ethereum and dumped it in the market. That's why we also saw a big downward price movement on Ethereum, but it's not useless, right? On the 1 month time frame, you still want to see that these tokens are correlated, because 1 month is a good enough time to see the medium trend of correlation. And the reason why correlation is important in crypto to crypto pairs is because when tokens are moving together, you're suffering less apparent loss. For example, if we look at the Arrow and ETH chart, if it's very like correlated and not very volatile, then you're not going to suffer as much apparent loss, right? Because if it's not moving much from your entry, then it's not going to be a high apparent loss pair. But the problem with correlation is that it doesn't show you like how big of a movement they move by. For example, if Bitcoin is trending upward and let's just say it's going up by like 5%. But if Ethereum is weak, for example, and it only goes up by 2%, correlation doesn't really show that. And the inverse is true also, right? If Bitcoin dumps only by like 2%, but Ethereum drops by 10%, you can see the correlation will not show that. So what you need to do instead of just relying on correlation is you want to bet on outperformance by checking the relative strength. So the keyword here is relative strength. And what that means is how is that coin performing against the quote asset? And typically the quote asset is what you're trying to accumulate. So for example, I'm bullish on Solana's performance against Ethereum, but I'm trying to accumulate Ethereum. So then I'm looking at this SOL to ETH chart. In this case, Solana is the base asset and Ethereum is the quote asset. So Solana is being priced in Ethereum terms. Right now, it would take me roughly 0.0815 Ethereum to swap for 1 Solana. So I actually entered this pool roughly at 0.06, right? When this happens, it means that I'm accumulating more Ethereum because it's trading above my entry. When you're providing liquidity for this crypto to crypto pool, I basically bought Solana at 0.06 to pair with my Ethereum on the downside, right? And when it's trading above that, Solana is being sold to Ethereum at a higher average price than what I bought in with. So logically, it makes sense that I'm in Ethereum profit for my liquidity, not even counting the fees. And that's what I like to see when I'm providing liquidity for like lower cap tokens against Ethereum. The only reason why I bought those lower cap tokens in the first place is because I'm betting on outperformance. It doesn't make sense to buy a lower cap token if it's bleeding out or underperforming Ethereum, because typically lower cap tokens are much higher risk than stuff like Ethereum or Solana. And if you guys are providing liquidity for Solana pairs, for example, Radium, then you want to measure like the relative strength of Radium against Solana, right? I could click, if you have trading view here, click on Solana, and you could see how it's performing against Solana over time. Basically bled out against Solana since 2021, and then now it's on an uptrend against Solana. And just like correlation, the relative strength like shifts all the time, right? Tokens fluctuate between underperformance and outperformance. But what I typically like to do is compare these assets against the quote asset and against some major tokens, but also against like the category leaders or similar tokens in the space. So MOG is actually one of my most profitable pools last year, and I recently re-entered this pair. And you can see I got a pretty great entry here at this green line. Now it's trading pretty high above that. So I'm in nice Ethereum profit in terms of my liquidity. So on apps like DEX Screener or Gecko Terminal, you could switch on like the US dollar chart or the Ethereum chart. I would argue if you're investing with Ethereum, the Ethereum chart is much more important. But what I want to do is not only compare MOG against Ethereum, right? For example, I could switch this quote asset to be Solana. You could see it's underperforming Solana when the market conditions were really bad. Now it's reversing towards the upside. Or I could compare against Bitcoin, right? Against all of the major assets. You could see it went all the way back to like the zone of support in April 2024. Now it's coming into an uptrend again, and we'll see if the move would sustain. And what we could do here is compare against category leaders. For example, I want to hit the dash key divided by, if I'm using Pepe, for example, because Pepe is the largest meme coin on Ethereum right now, I would then see that when the market conditions were not very good, MOG bled out pretty heavily against Pepe, and now it's again on an uptrend against Pepe. And so right now, this token is doing relatively well. And obviously, I'm not telling you guys to buy MOG or buy meme coins. Invest at your own risk. I like to provide liquidity for meme coins as well as other lower cap categories like DeFi. But you gotta find like the sector that you believe in and that you have an edge in. But basically, that's the idea of relative strength. So how do you know when to enter or exit a liquidity pool for this strategy? First of all, let's talk about like when not to enter, right? When it's trading at a very high price relative to ETH, for example, if we're looking at MOG, if I enter all the way up here, then it's very likely that if the market condition becomes bad, this token is going to retrace and basically give back all of its gain against Ethereum, which was what we saw back here. But a great idea is usually to enter at a zone of horizontal support. Like here, you can see like a zone of support. It broke down below that, and maybe the next zone is all the way down here or here. right? And if you're betting on like a reversal, then you should be looking for reversal signals, right? For example, a candlestick pattern is like with these long tail on the bottom, like these two long tails. That's a signal that people are buying these tokens and bidding it up. And also we saw a bullish engulfing candle here. And once it's closing above like key moving averages, then it's safer to actually enter this liquidity pool. But nothing is 100%, right? For example, you might think that this was the zone of support. You saw like a bullish engulfing candle here. You entered all the way back here, and then the token keeps trending down, right? I think that's actually what happened to me because I entered roughly like February 24th on this pool, slightly higher than what it is right now. But if I wanted more allocation on this pool, basically when it's trading below my entry, I could add more capital into this pool. And what it does is it drags down my entry, right? And if it reverses upwards above my entry, then I'm in nice profit. It's similar to trading. If you see that like a reversal pattern forming, you might choose to dollar cost average in rather than going all in based on what you see in the charts. And if we look at a pool that I'm also in, it's this Bonk and Ethereum chart. This is probably one of my highest APR pools right now on a larger cap token. And I got a pretty great entry down here. And it's not even the best, right? Because a lot of times you're not going to get the best entry. But I did what I was just talking about. I entered at a zone of support here. And if we just draw a horizontal line, you can see that during the past year or so, like 80-90% of the time, Bonk is trading above Ethereum. So that's one way to also look at it. If you draw a horizontal line across the chart, how often is that token trading above your entry? For example, if I were to enter this pool right now, I probably wouldn't enter because if I draw like a horizontal line here, you can see if the token retraces, I would be in Ethereum loss in terms of my original liquidity, and I have to make up for it in fees or average down my entry. And if I backtest my entry, you could see more than half of the time this pool would be sitting in a loss. Another sign of reversal that I've been using pretty often recently is the 20 period exponential moving average, which is like this blue line here crossing over the 50 period simple moving average. And the only way that this could happen is that the token is switching to an upward trend. So that's a decent indicator to see like a trend shifting. But with any indicator, it's not perfect, right? For example, it's crossing here, but then it's moving sideways for a long time before a bigger move up. But the core idea here, again, is to make sure the US dollar chart looks good, but also the crypto chart looks good, whether you're providing liquidity for Ethereum pairs or Solana pairs. Because if the chart looks very horrible, like it's bleeding out down here, a lot of times people with a lot of capital or experience would not be buying this token. Some people would average down, but also a lot of people are more comfortable to bid when it's basically on an uptrend. And again, it's not a sure thing. This strategy, it's better than just looking at correlation, but you can see, for example, my Arrow and ETH pool, I didn't get a good entry for this one. It's trading near my entry on this green line here, but you can see it actually touched the bottom of my range before reversing back up. But me entering here is much better than like entering all the way up here at like the zone of resistance. And before we hop off here, let me show an example of a weak token. I actually lost quite a decent chunk of money providing liquidity for Magic and Ethereum. Magic is a smaller cap gaming token. And if I pull up the Magic to ETH chart here, you can see it's been on an downtrend against Ethereum since like 2023. So it's been on a downtrend for quite a long time, and recently there's been like signs of reversal, and we'll see if the move would sustain or not. And I'm not trying to say like this project is good or bad, The nature of smaller cap token investing is that sometimes the project just fails, right? You could definitely bet on a reversal, but when the token bleeds out over time, let's say you provided liquidity since 2023, you would have seen a lot of pain by simply being in this pair, right? For example, if you enter at a great position here in 2023, you would still see like an 83% drawdown on your entry, and now it's still sitting at like a negative 63%. And to be fair, the daily chart looks pretty decent. It's been reversing and there's some like fundamental changes with this project, but you could lose a lot of money very quickly here if you're providing liquidity for smaller caps that are bleeding out against Ethereum if it's an Ethereum pair. And that's even more true if you're providing a tight range liquidity. So I hope that makes sense. A quick recap here is that correlation is how the token moves together. Like for example, if Bitcoin pumps, Ethereum pumps, that's a positive correlation. But the problem again is it doesn't show you like the relative strength and how much they move by. It just shows you the direction. So what I typically do is I bet on relative strength. And the main reason why I invest in smaller cap tokens in the first place is because I'm betting that it's going to outperform the larger caps. And if you guys get good entries for crypto to crypto pairs, it's much easier to make profit and stay in profit because you're going to be in profit as long as it's trading above your entry. So I hope that makes sense, guys. A lot of people talk a lot about correlation, but I haven't seen many people talk about relative strength when it comes to yield farming. There are a lot of other videos on my channel that you could check out if you're into yield farming. And there are a lot of misconceptions in the DeFi community. For example, they fear impermanent loss a lot. But in this video, I explain why it's actually a good thing sometimes, and different strategies like beating impermanent loss if you care about it a lot. If you guys like the video, be sure to hit that like and subscribe. And if you want to be notified when the next video drops, then hit that bell icon. Thanks for watching. I'll catch you guys on the next video.